And we are live. Good evening, everyone. We have a lot to discuss tonight. The regional banks are collapsing, just as I accurately predicted would happen. As I've said and stated time and time again, the Fed will continue to raise interest rates until something breaks. We do not know what that is that will break, but we will know it once we start to see it. And what we're witnessing now is that the banks that are too big to fail are getting bigger. And over about 15 years ago, we had well over 11 to 12,000 banks. As of today, we've consolidated down to now there's only 4,000 banks here in the United States. John D. Rockefeller said it the best. Competition is a sin. These individuals do not believe in free market capitalism, right? They believe in privatizing the gains where they, the corporation, the individuals, they get all of the gains, the profit, and they socialize the losses, and in most cases, leave you, the taxpayer, stuck with the bill. Now, they're going to try to spin this that this is the private sector coming up with a solution. But what you have to start to understand is that as more and more individuals want to pull their money out of these banks, these small local banks, they're going to want to park their money with these larger banks like JPMorgan, Wells Fargo, and Citigroup and Bank of America because they are deemed too big to fail. Now, nothing just happens by mistake. I've been telling you what's going to happen is that once we get this quote unquote too big to fail system where the big banks can't fail and everyone runs and parks their deposits there, we're going to wake up to what is known as a bank holiday. And during this bank holiday, this is where they're going to ban cash. They're going to take your deposits because, see, what many of you don't understand is that when you put money in a bank, that is no longer your money, right? You are at that point a creditor to the bank. So therefore, the bank, if they have liabilities, they can seize your deposits. So this is all a part of how they're ushering in the Fed Now system, the central bank digital currency. This is how you get to that point because now no one wants to leave their money at the small banks because they're afraid. And then everyone goes and puts their money in the large banks. And then the large banks now adopt the Fed Now system. Then they adopt the central bank digital currency. Then they ban cash. Then they bail in and they confiscate your deposits. I have been saying this for a long time, and it's going to continue to keep happening. Now, how do I know that these things are going to happen? Because history doesn't repeat itself, but it damn sure rhymes. If you go and read this book, and I tell everyone to go and read The Creature from Jekyll Island, there was something known as the savings and loans crisis that happened in the 1980s, where you had thrifts, right, that were in trouble. And at the time, I want to make sure that I get this correctly, the FSLIC, which was similar to the FDIC, was supposed to be backstopping these banks. And then in the end, they couldn't backstop them. And they ended up having to get bailed out by the FDIC and the federal government. When you read books like this, you would understand that nothing that's happening now is new. These things have been going on for a very long time. And it's the same thing that happened in 2008. Now, what I find funny, and also I find, I would say, some light at the end of the tunnel, is that we are witnessing centralization fail. I told you, when the Fed tries to go out here and enact monetary policy, you have to understand that it's like pressing on a string. You're never going to get it exactly right because you're either going to push too far this way or not far enough. And that's what happens with interest rates because effectively, this is what's happening right now. You have these regional banks that effectively were going out here because interest rates were at 0% for so long that they got the bright idea that they would take the customers' deposits, your deposits, and they would go out and buy treasuries because treasuries are paying a fixed rate. And if treasuries are paying 2%, 3%,
Hyundai versus the other guys.
give me 1 second.
Look what Hyundai has and what Honda, Nissan, and Subaru don't. Hyundai electrified vehicles.
I don't know where that ad is coming from. I don't know where that ad is coming from, but that would suck. It's coming from somewhere. One of these pages. But yeah, so there we go. It's this page. Let's turn this off here. Okay, that got us off guard. So effectively, what the banks were doing is that they were taking your deposits, because remember, your deposits are a liability to the bank. They were taking your deposits and going and buying government treasuries. So at the end of the day, your deposits are sitting there. They're not doing anything with it. They go and buy treasuries. Treasuries are paying 2%. That's great. But then once the Fed started raising interest rates, this is where the problem came into play. Because what people started doing is, okay, I'm going to sell the current treasuries that the banks are holding and buy the new treasuries because they're paying higher interest rates. So now remember, the bank that is holding these quote unquote treasuries, they used your money to buy the treasuries. Well, now those treasuries are worth less than when they purchased them for. So now there becomes a mismatch in regards to the liabilities, your deposits that they have to pay you back, and the collateral that they're holding. And then when everyone wants to come and pull their money out at one time or run on the bank doesn't have enough collateral to liquidate to pay you back. And this is why a lot of these banks, not just First Republic, not just Signature Bank, and not just Silicon Valley Bank are going to fail. Many other banks are going to fail. And Jerome Powell today, during the Fed press, the FOMC meeting, raised interest rates another 25 basis points. And now it's going to put more and more pressure on the regional banks. Now, like I was saying, the light at the end of the tunnel is going to be Bitcoin. Because remember, this isn't small mom and pop investors that have their money parked at these regional banks. These are people that are over $250,000. And now what people are going to start to say is that my money isn't safe in the bank, which is going to cause people to start looking for alternatives. And this is where Bitcoin comes into play. And I've been saying it to you guys time and time again. Yes, there are going to be those that are the zombies that are going to stay with the traditional banking system. But then there will be sophisticated, savvy people who will realize your money is at risk when you have over $250,000 in the bank. Why? Because the FDIC insurance only has anywhere between $125 billion and $150 billion. But they're insuring up to $9 trillion worth of deposits. Now, why is this important? Because if we come here, the FSLIC was an insurance fund for the savings and loan banks, the thrifts. And guess what happened? Once the crisis came, they didn't have enough to be able to cover all of the banking institutions. And the same thing is going to happen now, where you're not going to have enough to be able to bail out all of these small and regional banks, which is what's going to happen. The Fed is eventually going to have to step in and backstop the banks. Now, Dame Dash says, I hope your jaw is FDIC insured because I'm going to knock all the Sonic rings out of it. Dame Dash, you've been saying this for a very, very long time. Now, I know you're a little bit older, and I know you a real nigga boss. But come on, man. Listen, if you're going to tap the jaw, it doesn't take this long, man. Come on, man. What's going on, Dame Dollar? Get to it. So, I believe that Bitcoin is going to thrive in this environment because more and more people are going to wake up to inflation. They're going to wake up to what's happening with our banking system, with our monetary policy. Don't forget, we have the debt ceiling that's coming up. There's so many things that are happening right now that it is very important that you are thinking ahead. Also, how can you profit from this? Because everyone wants to talk about the doom and the gloom. We're also going to talk about ways where you can capitalize off of these banks that are going to be collapsing, because not all of them will collapse and some of them will survive. And you need to also know how to look for those that will thrive and those that will fail. Because see, I was talking about this before, and I was telling you that wealth is never destroyed. It is simply transferred. And now Carl Icahn, he lost almost $6 billion after a short seller report came out. Many of the people who have benefited from the legacy financial system are going to get fed on and fail within this time period. And that wealth that they've built up and amassed is going to be transferred to people like myself who are more efficient. You don't wait for the emergency to happen to run to the exits. You get to the exits before everyone else can see it. You have to see the obvious before it is obvious to everyone else. So there's so much that I want to discuss. There's so much that I want to get to. Please do me a favor, like the video, share the video, subscribe, hit the notification bell. Make sure that you set it to all. Also, if you are not receiving my notifications, here's what I need you to do. Go into my description. There's a telephone number. Text the word YouTube to that number, and therefore you will get on my text message list so that when I go live, I will notify you via text message when I do so. Also, you can follow me on Instagram. I create content far more frequently on Instagram than I do here on YouTube. So simply go into the description, click the link, and it will take you to my YouTube page. My page is now verified. So understand that if you go looking for me and you don't see the blue check mark, that is not me. Also understand it's better to click the link so that therefore you don't have to search for me. Why? Because I probably am the most copied and duplicated person on Instagram. There's going to be a ton of fake pages that are going to try to reach out to you and ask you how your trading is going to try to scam you. If you are looking to do business with me and you want to invest in the different investment opportunities that I have, you need to text the word invest to that number in the description below. And last but not least, I am the founder and creator of My Tech Academy. We cover all things Web3 and blockchain technology, DeFi, NFTs, Bitcoin, Ethereum, privacy coins, you name it. We have a free 3-day trial. You can come and test it out, see if you like it, free of charge. We also have a futures trading course. It is very important with all of the volatility that is going on now that you start focusing on trying to acquire skill sets that will allow you to thrive anywhere in the world as long as you have internet connection, which is why I've started focusing heavily on trading. I trade every day live with my students. If you want more information, come over to my website. With that being said, guys, if you can see me and hear me clearly, give me a 1 in the chat and we can get started. Peace X marks the spot. Great. We are good to go. So let's read this right here. First Republic Bank collapse spurs fears for banking system, broader economy. The demise of First Republic Bank raises questions about the strength of the U.S. banking system and the broader economy that relies on it. Monday's shutdown marks the nation's second largest bank failure. First Republic Bank had nearly $230 billion in assets last month, eclipsing the Silicon Valley Bank collapse. 3 of the 4 largest bank failures in U.S. history have taken place in 2 months. What have I been talking to you about for so long about the boom and bust cycle? About how the booms and the busts, they get bigger and bigger and they happen quicker and quicker. Now, I had some geniuses come to me and they try to say to me, "Oh, you don't understand. The FDIC insures deposits up to $250,000. Because all that's going to happen is the banks are going to get bailed out just like they did in 2008. So what I want to show you is right now, this is a graphic. Between 2008 and 2009, there was 160 bank failures. 160 banks failed between 2008 and 2009. We've had 3 bank failures this year, and these 3 bank failures are almost larger than all 160 banks that failed. I want you to think about that from sheer size, the amount of assets that are being held by these banks. These 3 banks right here are almost larger than all of these banks combined in a 2-year period. Because see, the failures are getting bigger now. So see, now you have to say to yourself, can the FDIC insure all of these banks if they start failing at the same time? Because again, history doesn't repeat itself, but it damn sure rhymes. And we're watching these things unfold before our very eyes. See, what happens to a lot of individuals when they get into a fight or flight situation is most of you revert back to things that you don't even know because you fear the unknown. Because most people don't want to admit that they've been a mark, that they've been abused and used by their government, that their government is treacherous. No one wants to believe that. No one wants to believe that someone truly is out here to fundamentally hurt you and destroy everything you've built. It is very hard for some people to come to grasp with that and to face that reality. So you will sit here and try to tell yourself that you have some type of protection that you really do not have. Because as I said to you before, the FDIC's insurance fund is between $125 and $150 billion. But they're insuring up to $9 trillion worth of deposits. So you can begin to quickly see that just because they say they're going to do it doesn't mean that they can actually financially do it, because there's something known as math. Now, when we take a step back, as I said before, if we go back to the savings and loans crisis, there was an insurance fund for those banks. And guess what happened? The failures were too large for the FSLIC to be able to do that. If you go and read The Creature from Jekyll Island, you would know this. And you would not be a fool and be quoting that your deposits are insured up to $250,000. And I'm going to play for you the actual FDIC laughing and joking about it. This video is on their site because they know that they do not have the funds to be able to backstop all of these banks. And we'll get to that in a little while. But I want to make that perfectly clear. So let's read this real quick because, again, I like to teach rather than sitting up here and scaring you. Because, see, when you are equipped with information, you print money. You see me, I print money because I know what's going to happen. I know the playbook. I know you have crisis, you have problem, reaction, solution. You create the problem or you allow the problem to happen. You wait for the public to react and then you offer a solution. Like Rahm Emanuel said, never let a good crisis go to waste. Now, what was the Federal Savings and Loan Insurance Corporation? Doesn't it sound like the FDIC? The Federal Savings and Loan Insurance Corporation is a defunct U.S. institution that provided deposit insurance to savings and loan institutions until its dissolution at the end of the 1980s. Its responsibilities were transferred to the FDIC in 1989. Wow. We already had an insurance fund that failed. Like, it is amazing to me how sometimes I can sit up here and listen to people try to justify the to defend the indefensible. And then they'll say, well, I don't want to put my money in that Bitcoin thing because cryptocurrencies they're too volatile. Okay. So this is Shiba Inu, right? This is a meme coin, right? And you would say to yourself, look at the coin. It's lost 95% of its value. Right? Why put my money in that crypto thing? Well, this right here is a bank. This is First Republic stock. Look at that mean bank stock. Look at the stock. It was just trading at the beginning of the year, $200. It's Wall Street darling. Look at it now. Right? Because many of you told me stocks are safer than cryptocurrencies. And I can show you stock chart after stock chart after stock chart that is down 30, 40, 50, 90%. See, at a certain point, right, you have to be mindful that Bitcoin is just getting started. Right? These are established companies, 20-year-old banks, 30-year-old banks. They've been merged and blended with so many other banks. Mergers and acquisitions have happened. They're regulated, and look at the performance of it. Now, what I was saying to you before about why this is happening, there's something known as fractional reserve lending and banking, where if you go to the bank and you put your money in the bank, your money is viewed as a liability. And legally before, it used to be that the bank only had to hold 10% of your deposits on hand. So if you put $100 in, they only had to keep $10 on demand, and they can go ahead and create loans with the other $90. Now, after the pandemic happened, the Fed cut the fractional reserve rate to 0%. So now banks don't have to hold any of your cash on demand and deposits, they can take it 100% of it and loan it out or go out here and try to invest it. And that's what these banks were going out here and doing. They were going out here and buying government debt, buying mortgage-backed securities. Why? Because they were paying 2, 3, 4%. And think about it. If they're taking your money, that's basically money that has no interest attached to it. So that's basically they have free money that they can go and park in an asset like a treasury that's paying them a fixed rate of 2% or 3% for the year. So they're making 3% on your money. And at the end of the day, all they got to do is, if you want your money, they just liquidate and sell the bonds. The problem is, once the Fed started raising rates aggressively, the new bonds paid the higher interest rate than the current bonds that the bank was holding. So what do you think people started doing to the bonds? They started selling them, because why would I hold a bond that's paying me 2% when I could go buy a bond that's paying me 3, 4, 5%? And that's what happened. So now when people came and started withdrawing their deposits, now the problem is the bank has to go and sell these bonds. The problem is the bonds are worth less than what they paid for. So now there becomes a mismatch between the liabilities, the deposits that they have to give back to you versus the assets that they're holding. And it's only going to get worse for a lot of banks that have commercial real estate exposure. Why? Because number one, we know that a lot of the commercial real estate was overinflated anyway because of the previous values that they had. And then when you factor in artificial intelligence, remote work, less people coming to the office, businesses are starting to realize, I don't need this 30,000 square foot office space when people can just work at home from Zoom. So now, what do you think is going to happen to the value of commercial real estate? It's going to go down. What do you think is going to happen to the value of the actual paper that's basically underwriting those commercial real estate loans? Those mortgage-backed securities are going to be worth less too. So therefore, it becomes a big problem where a lot of these banks, they do not have the actual collateral to be able to meet the depositors' demand. Because again, if people come out here and they want their money back, you have to be able to give them back their money, which is why a lot of other banks are going to face a similar fate to Signature Bank, to Silicon Valley Bank, and to First Republic Bank. Now, when we come here and we look at this over here. Where is it at? I want to pull this up. Right here. Look at this from 1990 to 1995. Look at all of the banks that we had. And these are large banking institutions. And then I want you to look at how they all turned into Citigroup here. And now we have Citigroup. And then all of these banks, Washington Mutual, Bank One, JPMorgan Chase, Chase Manhattan, Washington Mutual. You had Great Western. You had Dime Corp, First Chicago. They all merged into JPMorgan Chase. And then look at all of these banks. They all merged into Bank of America. And then look at all of these banks. They've all merged now and been acquired by Wells Fargo. So now you're having a concentration of wealth, a concentration of power, wealth, and influence in a few individuals' hands. And I've been talking to you about this is the problem with centralization. You are witnessing why decentralization is needed in the first place. When Satoshi Nakamoto created the Bitcoin white paper and released it in 2008, it was talking and trying to solve this very problem right here. Why? Because as we become more digital as individuals, and we're dealing with these centralized companies, they're going to be colluding and working hand in hand with big government. And all of your freedoms and your privacy is going to be taken away. And then what's going to happen is you're going to one day wake up and they're going to make cash illegal. And they're going to give you a central bank digital currency with an actual wallet that will be controlled by the government. They're already talking about the FedNow program. As I said to you before, everything you're doing already right now is being tracked, traced, and monitored. At this point now, they will have complete control because they will outlaw cash. And they will be able to do it in a blink of an eye. Why? Because everyone's deposits will be in these 4 banks right here. It's that simple. It's not complicated. Now, I know what you're saying. Oh, you are a conspiracy theorist. How do you know this stuff? How do you know about a bank bail-in? So this right here is from the FDIC's website. This is a meeting that they was having on the weekend when Bear Stearns went under 15 years ago. So if they were talking like this 15 years ago, just imagine how they are speaking about you right now. So give me 1 second. Let me get my good old speakers from behind here. And let's play this.
Right? I mean, it's really important. I mean, it's a little bit conflicted, right? I mean, it's important that people understand they can be bailed in, but you don't want a huge run on the institution. But I mean, they're going to be. It's really important. I mean, it's a little bit conflicted, right? I mean, it's important that people understand they can be bailed in, but you don't want a huge run.
He said it's important that people understand, but they don't understand that you could be bailed in. They were saying this 15 years ago. But you'll come here and you'll call me a conspiracy theorist, and you'll call me an alarmist, and you'll say, oh no, I'm misrepresenting what they're saying. No, they're basically sitting here right now talking about a bail-in 15 years ago.
It's really important. I mean, it's a little bit conflicted, right? I mean, it's important that people understand they can be bailed in, but you don't want a huge run on the institution. But I mean, they're going to be.
People need to know, but I don't think you have much hope of reaching a public that doesn't have a professional need to know.
I completely agree with that. I almost think you'd scare the public if you put.
He said basically only professionals need to know, right? Yes, the public should know, but do they really need to know? He's effectively saying, you know, do people really need to know this? And it's just amazing how, like, they just know the sheep are not going to do anything. They know that.
People need to know, but I don't think you have much hope.
I don't want a huge run on the institution, but I mean, they're going to be.
People need to know, but I don't think you have much hope of reaching a public that doesn't have a professional need to know.
I completely agree with that. I almost think you'd scare the public if you put this out. Like, why are they telling me this? Should I be concerned about my bank? Like, my insurance company doesn't tell me what they're doing with my assets. They just assume they're going to pay my claim, right? I think you've got to think of the unintended consequences of taking a public that has more full faith and confidence in the banking system than maybe people in this room do. So there's a select crowd.
He said, basically, the sheep have faith in the banking system. We don't. The very people that are supposed to be insuring the banks, insuring your $250,000, are laughing and saying, we don't got no fucking faith in the system. They're laughing at you, right? And it is amazing to me when I just watch people and how they really will try to, even with this information. The very people that work for the FDIC are laughing at the possibility that you could have faith in something like that, because they don't even have faith in it themselves, because they know it's bullshit. They know there's no way that $125 to $150 billion can insure $9 trillion of deposits.
Like, my insurance company doesn't tell me what they're doing with my assets. They just assume they're going to pay my claim. Right? I think you've got to think of the unintended consequences of taking a public that has more full faith and confidence in the banking system than maybe people in this room do. So there's a select crowd of people that are in the institutional side. And if they want to understand this, they're going to find a way to understand this. There's a bunch of law firms represented in this room. There's a bunch of people that charge them by the hour a lot of money to explain this all to them. And it's fine. I don't have a problem with that. And they all have huge staffs. But I would be careful about the unintended consequences of starting to blast too much of this out in the general public.
And that's what's starting to happen now, is that most people aren't waking up, but enough people are. And they're saying, give me my money now before there's a problem. And this is why I said to you, this is where I believe that Bitcoin is going to shine and Bitcoin is going to thrive, because enough people, are going to wake up and see, I need to have my money somewhere where there's no middleman and third party between my transactions and my money. This is where decentralization comes into play, where there's no one entity that can censor it, that can tell you when you can send your crypto, how much you can send. You can access your money as long as you have internet connection. This is where Bitcoin is going to thrive. And I'm telling you, it's only a matter of time. It may drop from here because, again, we're still at the infancy stage, but more and more people are starting to wake up and realize I need alternatives to the banking system. And then now when you start factoring what's happening with the BRICS, and you start factoring what's happening with the debt ceiling, and you start factoring in what's happening with our national debt, and you start factoring what's happening with the petrodollar, there's so many different things and moving pieces right now, which is why you need to make sure that you are looking for opportunities, because what you should not be doing, do not be a person that sits here and you're worried about doom and gloom. Money is going to be moving. Let me show you something right now. For the people who were out here, who were shorting this stock, for the people who are buying puts in this stock and First Republic Bank, they made a killing. I was in a Discord group with some young guys killing it right now, trading bank stocks. Absolutely killing it. Listen, Michael Burry, during the Great Recession in 2008, 2009, made billions of dollars shorting the housing market. Wealth is never destroyed. It is only transferred. All of the wealth that was in First Republic Bank has been transferred somewhere to the people who are betting against the stock, to JPMorgan and individuals who were able to take over the bank and the assets. The wealth was moved somewhere. So if you're seeing this right now, what should you be thinking, right? If you're looking at this, you're saying to yourself, okay, how do I approach this? And don't worry, we're going to have subsequent videos where we're going to get into looking for opportunities, right? This is how you go dumpster diving, because you look up here and you say, okay, simply go regional bank stocks. You have a whole list of different bank stocks right now that you can look at. Now you have Pacific Western Bank. They started now, their stock started getting slammed. Western Alliance Bank started getting slammed, and Key Corp started getting slammed. Now, I personally have bank accounts at Key Corp and lines of credit with Key Bank. And what I would be saying to you is that, well, you have Key Bank here and you have Key Corporation. I have a bank with Key Bank. What I would be saying to you is that now is the time to start going here and looking, okay, number one, seeing what's on the balance sheet of these banks. Which one of these banks are holding a lot of commercial real estate paper or have a lot of commercial real estate exposure? And then also looking at which one of these banks will survive. Because like when I come here and I look at this bank here at Key Corp, and I'm saying to myself, wow, if we just simply look back a year ago, you know, this bank is trading at what, $9? I may want to buy this bank if I think that this bank could survive. Back here a year ago, before everything started going to hell in a handbasket, it was trading at $28. So this is how you can go here now and start looking at some of these banks and saying to yourself, are these some stocks and equities that I could punt on? Similar to how you look at averaging into some of your favorite cryptocurrency projects, whether it's Chainlink, whether it's Cardano, whether it's garbage like XRP, where you're buying it at 40 cents because you believe it could get back to $2 or $3. This is how you should be thinking about these opportunities, not sitting up here getting scared. And as I said to you before, there's going to be a lot of volatility in this particular sector. Why? There's going to be days where these stocks are up 20, 30, 40%. And there's going to be days when these stocks are down 20, 30, 40, 50%. Now, over here, this is the actual ETF that tracks the regional banks. And look at it, it's been getting slammed, absolutely crushed. It's basically cut in half from its high over here of what, $78. So I've already started doing some research on these banks and looking at their balance sheets and looking at their earnings and also looking at the potential of, again, which one of these banks are going to be able to survive. Because again, just from a sheer number of banks that's going to fail, if you can find a few that will actually be able to withstand this and live through this, it's going to be a buying opportunity of a lifetime. Or if you just want to trade it, you can definitely go out here and trade some of these bank stocks. Now, again, I'm going to plug my trading course because I believe in the things that I teach. I trade every day live with my students and we trade futures. Why do I trade futures? Because futures tends to move really, really well. If you want more information about that, you need to come over to my website because, again, we are going through the fourth industrial revolution and the Great Reset. And there's going to be a lot of turmoil, but there's going to be a lot of opportunity. And you have to be saying to yourself, making sure that you are positioning yourself to thrive and take advantage of these opportunities when they present themselves. What you should not be doing is sitting around all day long talking about the world's going to end. It is not. The Mayan calendar came in 2012. We're still here. It's 2023. Y2K came, the computers wouldn't be able to go to 2000. It happened. We're still here. Obama was supposed to be president forever. That didn't happen. He served his 2 terms. He went on. Donald Trump was supposed to be the reincarnation of Hitler. He's gone, and we're still here. Focus on acquiring skills so that you can thrive in the current environment that we are in. What you should not be doing is sitting around panicking, and also understand that old keys do not unlock new doors. Look at Carl Icahn. Carl Icahn has lost $6 billion of his net worth. And I've been telling you, more and more individuals like this, wealthy individuals, institutional investors, because they are dinosaurs, because they cannot pivot, because they are not adapting to new technology, they're going to get left behind. And the more efficient players like myself, those of us who are investing in the quote unquote Ponzi scheme, cryptocurrency scam things, we're going to get filthy rich. Those of us that are trading financial markets, who understand how to trade the markets, are going to make a ton of money. Those of you that have tech-based skills are going to be able to absolutely kill it with the technology skills that you have. Why? Because you're going to be in high demand with artificial intelligence as AI comes on, as 3D printing becomes better, and so much more. Now, I'm looking over here and I want to address something that someone just said. So would you buy any cryptocurrency now or sit on the sidelines? See, that's the thing. You can't time the market, right? So I'm a firm believer in you buy when there's blood in the streets. So when everyone's calling crypto a Ponzi, when everyone's calling a scam, that's when you should be looking to average in. So I still personally believe that the crypto markets are going to go lower. But again, I could be dead wrong. So this is why I don't sit up here and try to think that I'm going to buy the exact bottom. Like, you're never going to buy Bitcoin at $3,000 to the dollar, to the penny, and sell it at $64,000. That's just unrealistic. What you should be thinking about is averaging into your position. So if I have $10,000, $15,000 to invest, number one, I really wouldn't even be looking to invest it. I would instead of being trying to invest into myself to make myself more valuable in the marketplace, to increase my skill sets, to earn more capital, to invest more. See, I tell people all the time, number one, your job is going to be your first investment, right? I'm not like these other idiots where I'm going to tell you to quit your job. You would be a fool to quit your job. Your job is your first investor. Your job is going to be the one that's going to be able to allow you to invest in yourself, to acquire more skills, to then go earn more money. And then as you earn more money, then you go and invest that money. That's how you build wealth. You use your job to get more skills, to build up a savings, to then acquire more money, and then invest that. As you are investing in things like Chainlink, Cosmos, HBAR, DAG, Graph Token, you know all the projects I like. That's an investment. Then you want to have a skill set that can make you daily or weekly money, whether it's building websites on the side, whether it's leveraging artificial intelligence, whether it's leveraging your business credit, whether it's leveraging trying to trade the markets, whatever the case may be. Because now if you can pull out $1,000, $2,000, $3,000 on a weekly basis, now you have more capital to invest. You need to be thinking of ways to duplicate yourself and leverage yourself. So if I only had $5,000, $10,000, $15,000, I wouldn't be looking to invest it. I would be trying to invest it in myself, right? Because I think that to think that you're only going to invest $5,000 or $10,000 or $15,000 and poof, magically this one coin or this one stock is going to give you a 100x, that's having a lottery ticket mentality. That's just not the way that you should be approaching investing. And as I said before, we've already had these banks start failing right here. These 3 banks, and it's almost larger than all of the banks that failed in 2008 and 2009. There's more to come. And the Fed already raised interest rates again today, another 25 basis points. So there's more pain to come, which means there's going to be a lot of opportunity. So again, I would be focusing on trying to acquire the skill sets that you need. BMO moved primarily towards commercial banking. I'm curious on how they're looking now. What's the name of BMO? Let's look it up. BMO Bank. What is this called? BMO Harris. What's the name of the bank? So I can look up the stock and see if they're a private institution or publicly traded company. BMO stock. Let's go bank stock. If you know the ticker, tell me the ticker. Bank of Montreal. Montreal. Give me 1 second. Pull it up and let's look. Boom. Let's go here. BMO. Let's see if I can find it. Yep, found it. Got it. Boom. Let's pull it over here. Looks like it's been getting hit too. Looks like this stock's been getting hit as well. Boom. Yep, it's on the New York Stock Exchange. Look, it's been getting hit. It's been getting, ooh, it got some room to go down. Oh, this got some room to fall. So look, right there, live. This is something that you would want to go do some research on. Yep. Right here, you have something to go and do some research on as a potential opportunity to go look to buy some puts in or look at just short the actual stock, the underlying stock. Like, look at that. Got some room to fall. This is back here before, right around the pandemic. It got as low as $36. You got some room to the downside. Do not get scared. Join groups and individuals that you can learn from to make some goddamn money. One of the biggest regrets I have is that back when 2008, 2009 happened, I allowed people like Peter Schiff and Alex Jones and David Icke to scare me. And all I did was sit around and read books and talk about the end of the world. The world is not going to end. You are still going to be here. And your job to yourself and to your family is to make sure that you are giving yourself the skill sets to provide and thrive. Boop, boop, boop. I like that though. This right here, definitely going to put that on my list, doing some research. I have a whole list of stocks that I'm looking at right now to do some research on. Thank you, Mike Motre. Appreciate it. That evil giggle. Absolutely. Credit unions falls into the small bank category. Oh, JPMorgan has a lot. I believe that they said JPMorgan has well over like 16 or 18% of all the reserves in the United States. Absolutely. The trading courses for lifetime members. Remember, as a lifetime member, you get access to everything. You don't have to pay for anything additionally. You're a lifetime member. One thing about me, I honor the things that I say that I'm going to do. For those of you who've been a lifetime member from the beginning, you have access to everything at no additional cost at all. Officer E is definitely here. Listen, guys, it's a lot of opportunity that's going to come. Over the weekend, we're going to be discussing what's going to happen next with a lot of commercial real estate, because I believe that commercial real estate is going to be the next shoe to drop. You have the fossils, Warren Buffett and Charlie Munger already coming out and talking about it. Yeah, I don't know too much about BMO. I was just looking to it. That's the whole point. Tim, you may know more than I know. I'm going to do the research though. If you give me a ticker, I'm gonna look at it and see, because just because they purchased the bank doesn't mean that they're healthy themselves. So, M&T Bank, give me some tickers, guys. Boom, 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 boom. Nope. Give me the tickers. I'll look them up. I'll put them on my list. I have a whole group of stocks I'm looking at. MTB. Oop. Look, they already started getting hit up. See, not saying that they can't go lower, right? Because remember, I mean, if they're going to go bankrupt, they could go much lower. But this is a daily, right? Let's go to a weekly. Let's do a monthly, so you can actually see. Oh yeah, this shit got some room to go. Not really. Nah, not really. Unless it was to go down completely. Boom, boom, boom. We're looking for regional banks, right? Only regional banks. So if you come here, you just go Google the regional banks. They're all right here. Look at Riot, Mara, Bitcoin miners. Last 3 months they've been running. I really am looking and buying into KeyBank. That's what I've been looking into a lot. I have accounts there as well. So, cool. Riot. I wouldn't touch anything in the mining space. I'm not a fan of most of the quote unquote Bitcoin and mining equipment has been financed with cheap debt. They're no different than the banks in my personal opinion. This is why so many crypto quote unquote banks have failed, whether it's been Celsius, whether it's been BlockFi, because they're trying to act like a bank and they don't have the protections that banks have at all. And they're centralized, right? So I would be very, very careful with these mining plays. But and look at this. This was called, it's called Riot Platforms. Boom, boom. Look, I mean, this shit's been hit hard. Has room to run, right? If you go back up here to the peak, but listen, I wouldn't touch any of that mining stuff. Anything in the mining space, anything that's like finance with debt and leverage. Right now, debt and leverage is extremely dangerous. I would be very, very careful with any of these crypto mining companies, platforms. Most of them, in most cases, are Ponzi schemes, and they're just, a grenade waiting to explode. I know. I'm not a fan of it. What's a good forex trading platform? Hero FX. That's what I'm going to have all of my students trading with. For those of you who can't get an account with NinjaTrader, you'll be using Hero FX. Be careful with any offshore broker. At the end of the day, don't put in there what you cannot afford to lose. Because I've been burned with a lot of these offshore brokers. You should never leave more than $5,000 worth of crypto in these offshore brokers. Look up SUH.L. What's this? Let's see if it's something I like. It doesn't pop up for me. SUH. Why Polygon hasn't pumped? Because there's no retail money right now in crypto, guys. All of these pumps, if you look at Bitcoin and everything, it's been going up on low volume. The volume has not returned. Retail money has not returned to crypto. It just hasn't. We don't have any retail money in crypto right now. Most of this trading is just bots. Straight up. Ali Financial, boom. They already started getting hit, but they got some room to drop too. See, look, this is something I'll give you guys some free game right now. I've been looking for all of the stocks that have this pattern right here, where they went down sharp during the pandemic and then they bounced crazy. Right? Those are all of the stocks I've been looking to get short. They all have this same pattern. So now it's just a matter of seeing what their balance sheet looks like. Thank you for that. Let me add that to my list of tickers. Give me 1 second. Add this. So I got BMO that I need to look into. BMO. And put this in my little Excel spreadsheet. And we have Ally. I love to see them that have that pattern right there. Santander. Heard of that bank before. Let's look it up. Let's look at the pattern. Automatically. Here we go. Right here. Bang. Banco Santander. Okay. They've already been hit hard. they're already a shit coin. That's the subprime king of auto loans. Yeah. I mean, they've already been hit hard though. They've been hit hard. Thoughts on Maple MPL? Let's look it up and see. Let's add these to the list. So, like I said, over the weekend, we're going to be doing some fundamental analysis on some of these portfolios. That's nothing. With the car loans. It's Sudden Bank. Let's look it up. Let's see if we can put in the name and see if we can look at that up. Sudden. Nothing here. Yeah, nothing, guys. But this weekend, I have a whole list of just banks that we're gonna get together and we're doing like research and actually looking at stuff, because you could tell like I'm back into like trading and investing, because this is where the money is made, right? Like When the volatility gets like this is where you print fucking money. Money is made now. Just like you can make money when the market goes up, you can make even more when the market goes down. But back to Polygon, you have to understand that many of the lower cap cryptocurrencies are heavily dependent upon venture capital. And if venture capital isn't there, if retail isn't there to get tricked into buying this stuff, it's just not going to pump right now, right? So here's what we need to happen. We need the large people, investors, or depositors who have deposits over 250K to get spooked about banks and start putting their money into Bitcoin. Why? Because here's what happens. People are always looking for the next Bitcoin, right? So see, one mistake I made during the bubble was that I underestimated human stupidity. Like, I never thought in my wildest dreams that Dogecoin would get to the market cap that it got to. I thought that people would have enough sense to know there's no reason to buying a dog coin, right? But I underestimated stupidity. I won't do it again. So here's what I understand. You need the money to pour into Bitcoin first so that the dummies can then come back to crypto. And what they're going to do is, these are the people that's going to pump your bags. This is why it's important to own quality coins, because then they're going to look at something that's like 16 cents or 20 cents. They don't know nothing about market cap. They don't know anything about coins in circulation. They simply look at the price and they go, oh my God, this thing is 10 cents. They don't care if it's 30 trillion of the coin in circulation. They look at the price. Those are going to be the people to pump your bags. They're not here right now. So you're like H-bar, DAG, Quant. They're just not going to pump the way we need them to pump. Own quality projects, wait for the dummies to come, and then dump on the dummies. Thank you, David Thomas. Appreciate it. Lifetime member supporting the guru. Not a guru, baby. A guru. You heard? How do I research the stocks that I invest in? I'll show you guys over the weekend. It's way too much to talk about here, but I like to look into the partnerships that they have. I like to look at the cash that they have, depending on what type of asset it is. Also, depending on the market climate and the sentiment, looking at new rules and regulations that are getting ready to come out. The fact that the interest rate environment that we're in, do they have a ton of debt? Are they going to be able to service that debt? Are they paying a dividend? Will the dividend be able to hurt them in the long run? Like, I was looking at a lot of other companies that pay high dividends and saying to myself, will they be able to continue to keep paying that dividend in the long run? Looking at their balance sheet in regards to their corporate debt and bonds that they hold. Also, a ton of different research that you do. But I don't just look at like a price chart and look at like, technical analysis. Like, no, that's more or less for trading. Like, if you're trading, you look at technical analysis. But when you're looking at something like this and you're saying to yourself, okay, I want to look at which banks are in trouble. I want to first look at, why did people look at Silicon Valley Bank, Signature Bank, and First Republic Bank like that in the first place? And then go out here and extrapolate and say, okay, well, these banks had this on their balance sheet. Which other banks look exactly like those banks did? Because now you could make that comparison and say, okay, well, then they're next to get hit. How much you need to start trading, it all depends on where you're trading at. If you are trading with like a Forex broker, you only need $500 to $1,000. If you're trading micros on, futures, you only need $500 to $1,000. Now, how much money are you going to make? Not a lot, right? If you really want to make some good money with trading, livable money, you need anywhere from $25,000 to $50,000 to really make some livable money. Now, here's a solution to you guys that don't have the money. There are platforms that you can go to where you pass a combine, you have to trade on the sim, and if you can demonstrate that you can make money in a simulator, they will then give you a funded account. So I'll put that in the link for you guys, those of you who are interested in trying to go through a combine, because that's what I'm going to be teaching my students how to do, is try to get through the combine. And we have Top Step Trader. Boom. So this right here, boom. If you can pass their combine, they'll give you a funded account for $30,000, $40,000, $50,000, etc. Boom. So I just posted it for you guys inside of the thing right there. But for those of you asking about post chain, I'm not a fan of it, but it's gonna pump. Listen, things like Hex, Pulse Chain, they're gonna pump because Richard has a following. Richard is very good at marketing, and Richard is smart, right? So at the end of the day, it's gonna pump. I'm just not touching it. It's just I'm investing in other things that's gonna pump as well too. I don't need to go gambling. So I tell you guys all the time: know what you own and why you own it. Know when to get in and know when to get the hell out. Don't marry any one position. Hit them and quit them. With that being said, guys, we have 55 minutes left. I don't want to run over an hour, so I'm going to leave this right here. As I've been telling you guys, the Fed is going to raise interest rates until something breaks in the economy. And we're already starting to see the regional banks start to break. We're already starting to see that these 3 bank failures right here, 1, 2, 3, are almost larger than all of the bank failures in 2008, 2009, right? And this is just 3 bank failures, right? So it's only a matter of time where if we get 6 or 7 bank failures, it's going to be larger than all of the banks over here in 2008 and 2009. The big banks are getting bigger, and it's all part of design to create a central bank digital currency, to do a bail-in and confiscate your deposits and make cash illegal. This is why I believe that Bitcoin and crypto in general is going to thrive over the next 6 months to a year, eventually once the crisis gets bad enough, because people are going to look for alternatives. Now, what should you be doing? You should be looking for ways to profit from this. There's going to be a lot of opportunity in this type of environment. So with that being said, guys, please like, share, and subscribe. Hit the notification bell. If you're not receiving the notifications, go to the telephone number, put the telephone number in, text the word YouTube, and you will get added to my YouTube text message list. Also, follow me on Instagram. A link is in the description below. Please beware of scammers. I would never DM you first. I am extremely, extremely busy. If you want to do business with me and invest with me, my number is in the description as well. Text the word invest to that number, and therefore I will send you more information about the investment opportunities that I have. And last but not least, I have my Tech Academy. We have a thriving community of hundreds of other individuals who are into crypto, who are into investing. We have a free 3-day trial. Please come and test it out. See if you like it. If you like it, you can stick around. If you don't, cancel it free of charge. With that being said, guys, Officer E is out.